Welcome to Lesson 1 in this series. We are going to begin with an introduction to profile concepts. And as usual, before we begin, we need to take a look at the disclaimer. Please take a few moments to read it carefully, and I'm hopeful that everybody can read it, so I am going to move along and begin with our lesson. All right. Now, many Forex traders are still quite alien to the profile and the concepts involved with market profile. And I still meet many people that will tell me the profile just simply does not apply to Forex, which is a huge fallacy. As a matter of fact, the profile is probably one of the best tools to help Forex traders. And as you will see as we navigate through the lessons in this course, you will begin to gain an appreciation for the level of power and the benefits that the profile brings to the world of Forex. So this is why when Forex meets the profile, the outcome is very positive, and the benefits are really just tremendous. And I have yet to meet somebody that learned about the profile that was a Forex trader that told me after they've learned how to utilize and properly apply the profile that they could not find a use for it. Now, it is true that Forex is not traded on a central exchange, and the same type of data that is available on central exchanges, for instance for equities, for commodities and futures and so on, is not available for the Forex pairs. However, even though that's the case, there is still a fair amount of data that is available, and we can still utilize this data effectively. The more we learn about the profile, the more we understand how the profile works, the better we are at being able to make sense of this data, to employ it to our advantage, and to make better trading decisions. And ultimately, that's the goal of any trader, to make more effective trading decisions, to increase the probability of success on any trade that you take. And this is where the power of the profile comes in. It really helps us to gain an advantage, insight into the market through actual market activity, through an understanding of what the market participants are actually doing in the market. So we're not conjecturing, we're not using some sort of an indicator to try to gauge for us what's going on. We are looking at data that is gathered from the market to tell us about the condition of the market and what is going on in the market. And that's why it is important to learn about the profile. Trading is about information. The more information that you have, the better the information that you have, the better the outcomes. And information is so valuable in the financial markets. As a matter of fact, it is considered a crime if anyone has insider type of information because of the power that that information brings. Now, profile is legal, and all of the things that we will talk about are certainly legal. And so let's take a look at the type of information that is essential for making proper trading decisions that we can get from the profile. Now, when we look at information that would help us in trading, we're basically looking at two principal types of information that may impact our decision-making process as traders. One is fundamental, and this is especially important for Forex traders because the primary and the major participants in the Forex market are central banks. Now, central banks are motivated and act and behave based on a lot of economic fundamental data. Quite often, we do not have access to that same data that they're looking at it. Sometimes we may be privy to some of that information in the news. Sometimes we may do a little bit more research, and we might have deeper and greater understanding. But nevertheless, as individual participants in the Forex market, we simply do not have the resources that a central bank has, or the type of research intensity and activity that one has to engage in to obtain valuable fundamental information. All right, so now the other more practical way for us to gain insights and information about the market is through technical data, through the actual activity of the market. And that is why so many people focus on technical analysis and the art of chart reading and trying to discern what is going on in the market based on charts. Technical analysis is really the process of analyzing and understanding market activity. And there are many useful tools on the market already to do that. Some of you may be familiar with them. If not, I certainly encourage you to investigate and to learn more about technical analysis. It is an important art and science in the field of trading. We will talk about some of those concepts together throughout these lessons, but certainly we will not cover it in great depth or in great detail. Now, some of the technical charts you may be familiar with are things like line diagrams. A line diagram is a very simple chart. If you will take a look here, I have a line diagram, and this line diagram is basically based on the close of a period, and in this case we're looking at a 30-minute period. Every time that period closes, it plots a dot. So I have a bunch of dots here, and this gives me a pretty good idea about price action in the market, which way it is going and how it is moving. I've plotted each of the closes on this line diagram, and most of you are probably familiar of volume bars below in addition to the line diagram. Very basic, very simple, yet useful. I mean, there are things that we could identify quickly from looking at a line diagram. For instance, we can see that here was a level of support, and prices tended to move higher from there. This was the prior close. We managed to go above that, and we continued higher, as you can see. And all this just from a very simple line diagram. Now imagine the depth and the wealth of information that will be cultivated from profile charts. If we can get just that much from a line diagram, imagine what we will be able to get from profile charts. Point and figure charts, another one of my favorite type of charting techniques that I often and still use to some extent are point and figure charts. Point and figure charts really take a look at price reversal within a defined range, and we get O's and X's plotted on the chart for movements up or down, and basically we analyze price direction based on the movement and the reverse activity that takes place on a point and figure chart. Again, I don't want to spend too much time on these charting techniques, but it is very important for us to take a close look at the different technical charts so we can appreciate what the profile brings to the table and how it is different from other charting techniques. Really, it says here line charts, but I'm going to correct this right now, and we are actually going to call them bar charts, not line charts. We've already looked at a line diagram. This will be a bar chart. And the bar chart basically is another very simple way to look at market activity. And all of these charts are looking at the same period of time for the same instrument. And basically a bar chart shows us the open, the close, and the range of the range of movement for that particular period. That's what a bar chart looks like. Renko charts, another type of chart that some people like. Renko charts can be useful. They change color once we change direction. That's a Renko chart. You notice you set the size of the bricks and in terms of how many pips or how many points if you're trading futures, and the colors stay the same as long as it's moving in the same direction. Once we get a reversal, things change, color changes. That is a simple Renko chart. And of course, candlesticks. This is probably the favorite of many, many people, and I would venture to say that that is the most prevalent and the most used type of chart by traders today. And so everybody should be familiar with what candlesticks look like. So far, we've talked about a lot of different charts, and we haven't talked about our profile. So really, it is time for us to introduce the profile and begin to talk about this wonderful new type of charting technique or this nice charting tool. Now, here's an example of a profile. And by the way, there are many different ways to build a profile, and the profile can look different on different platforms. There are just a plethora of options when it comes to the profile. So this is one look. We're going to begin with the basic look, and we will probably look at some variations of it. What I want to highlight here is all the letters on the chart, and quite often this is what seems confusing to participants or to people in the market. They don't understand what all these charts mean. How do you analyze them? And that's our job in these lessons, to make sense of what is on these charts. So for starters, let me just identify that we have two different sessions on this chart. Here is, I'm going to switch tools. I'm going to bring my highlighter back. Here is one session, or a portion of it shown on the screen, and here is the other session right next to it. There are some lines, and we'll talk about what those lines mean. This happens to be two consecutive sessions for the euro-dollar pair. And here are the range of prices that overlap for these two sessions. This is the trading range in terms of prices for them. So this is what a basic profile chart looks like. And let us take a little bit of a closer look at how the chart is built, where these letters come from, and what do those letters really mean. Now, the one thing that is common to all of these different charts that we looked at is the fact that all of these different chart types are designed to provide us information about the market auction. This is a very important concept that many traders often overlook. That anytime you're going to trade in the financial market, you are going to trade in an auction market. And when you're analyzing any chart, you should have that in the back of your mind. So in order to appreciate and understand that we are in an auction market, we have to know a little bit about auction markets, how they work, and what influences them. And then that will help us as participants in these auction markets. So there are some basic concepts that we want to introduce and just briefly discuss before we delve into the profile. The profile is really a great way to understand the auction process, to follow the activity within the auction market. And that's what makes it such a powerful charting tool. It works in harmony with the auction, demonstrating and showing us clearly direction, rotation, and sometimes even momentum, and the nature of the participants that are driving the market. There are just a few basic concepts that one has to get under their belt when we address and talk about auction markets. And again, there is a lot of information about auctions. I encourage you to read and study more about them, because if you're going to participate in an auction, it is very useful to have a good understanding of that. I'm going to simplify some of those concepts and briefly discuss some of the major ones that we will need to review before we tackle the profile. The first concept has to do with the bid and ask. Anytime you're trading in a financial market, there are bidders and there are, or buyers, and there are sellers. For a transaction to take place, someone is bidding and someone else is offering, or their offer is the price that they're asking in order to sell. Now, whether you are looking at a bar chart or any of the other types of charts that we are looking at, all of these key elements are going to come into play. The transaction is going to require understanding of the bid and ask. You also need to understand how volume influences the auction and how we can discern and identify momentum within an auction process, and most important of all, direction. What is the overall direction of the auction and the market? So these are some of the key concepts that I'm introducing early. I want you to keep them in the back of your mind, because we are going to tackle them throughout our lessons in this course. All right, well, anytime we are looking at a single bar or a candlestick for that matter, and we will look at both, there are some very important pieces of information that we could garner about the auction. First of all, we need to know how long, or what is the duration of this auction. What type of an auction is it? Is it a time-based auction? Is it a volume-based auction? Is it a tick-based auction? To keep things simple, let's call it a time-based auction. And let's say this is one-day session, a 24-hour period in the Forex market. Again, one of the most actively traded and one of the most popular to trade is the Euro-US dollar pair. So I will use that for my examples. So let's say this is a 24-hour period of the Euro-dollar pair trading. What does this bar tell us about the auction? Does it tell us any information at all? Well, yes, of course it does. It tells us, first of all, that this was the price level where the auction opened. It tells us that this level is where the auction ended up closing the session. It also identifies for us the low of the session right here and the high of the session and the range of the price movement during that session, the movement between the low and the high. All right, does it give us any more information about the auction? Does it tell us anything else about what really happened during the auction besides these key parameters that we have, or key elements that we've just identified? Unfortunately not. Well, let's move on to our favorite and most popular charting techniques or tools or types of charts, candlesticks. Candlesticks are wonderful. I first learned to when I first learned to trade, one of the first things that I focused on were candlesticks, and as a matter of fact, we will continue to use them. and I continue to use them, and then I'll point out how they can be used with the profile. But again, let's begin by asking the same question. What does a candlestick really tell us about an auction market? All right, let's imagine this same candlestick for a 24-hour period, euro, US dollar, and what information will this candle impart to us about the session? Well, of course, it tells us when we opened, and since we had a higher close than the open, that obviously this was a bullish session. We opened here, moved higher, and ended up closing up there. So it was a positive or a bullish session. We know that much. And we also know the high right here, and we know the low, and of course, just as we did with the bar, we're able to identify the range, the total price movement or range of price activity throughout the entire session. Now, there are some that will say, okay, the body of the candle is also useful, so let's focus on the body itself. To what extent the body occupies the entire range. This would be a very full-bodied candle. It occupies most of the range, so this would indicate a very bullish session or a very bullish activity in the market based on the information that we get from the candle. Anything else beyond that? Not really. There isn't a whole lot more that the candle could tell us about the auction. Well, what if the shape was different? If we look at a candlestick that looks like this, does this tell us any more information about the auction? Well, certainly this is a very different looking candle from the previous one. Identifies the low for us right here. It identifies the high for us up here. We see the open and we see the close, and this one has a much smaller body within the range. So yes, this one does give us some interesting information. First of all, it tells us that prices opened here, and then obviously at some point during the session they were driven all the way down to this low, and then what happened was buyers stepped in and this price level down here was rejected, and we came back to the open, and not only that, prices managed to move quite a bit higher and made it all the way to this high, but then sellers drove them back and brought us to this point to close the session right up here. So, was this a bullish candle? Was this a negative bearish candle in the market? Based on just the information that we have in front of us about the auction, we are more inclined to say that this was more of a bullish candle than a bearish one. After all, we did close above the open, and the extent of movement in the range to the upside was quite a bit higher, but there are sellers present in the market, and they did manage to push us back for a fair amount of the range that was covered for the session. So even though it does tell us the auction overall was bullish and the sentiment is bullish, we know that there are some sellers up in this area. That's about it. It just does not tell us much more than that. And as a matter of fact, we even had to think a little bit about the activity to be able to discern and extract this information. It's not really obvious or intuitive simply by just looking at the shape of the candle. Unlike, of course, the open and the close, the low and the high, those are very simple and anybody can identify those. But the story of the auction, what really happened in the auction, what took place within the auction, this was a full 24 hours. And at the end of the 24 hours, this is where we open, this is where we ended up closing. It doesn't look like really, if we just look at the body, like much happened there, but in reality, we did drop significantly. We came back up, we exceeded the open, headed up, made another high, and then came back down. Now, interestingly enough, we also don't know the flow of the auction. So, for instance, when we opened, did we go up first and then come back down all the way down? Did we go down first and go back up? Once we look at a completed or closed candle, as we do in this case, as we're looking here, we really have no way of knowing how the auction manifested itself and how it developed. The actual development of price action in that auction is really hidden from us. We cannot see it from the candlestick. The only way we would have been able to get some inkling is if in fact we had a recording of the 24-hour session and then we played it back and saw the price movement and the price action. But simply looking at the candle alone, we would certainly not be able to do that. Now, why is it that I'm spending so much time talking about the auction? It really is because of its importance. All financial electronic exchanges operate as auction markets. And to be a successful trader, you must understand the auction process. You can't participate in the auction and not really understand how it works. The better you understand the auction and how it functions, the better a trader you will become. All right, so back again to the very first element that I said we would talk about and introduce, the bid and the ask. Let's talk about the bid. What is the bid price? What is a bid price? Well, a bid is the amount that a buyer is willing to pay to purchase something. So when I have someone bidding a certain amount, 1.2645 for a currency, that is what they're willing to pay to purchase that currency. And the ask is the opposite of that. It is what a seller, okay, now in this case it is the seller is willing to accept to sell. I'm going to change the color of my highlighter. I think the blue might show up a little bit better here. The yellow seems a little faded on this background, so hopefully you can see this better, and I'll continue using this color. I just got a note that the yellow is faint, so I will change colors. The amount that a seller is willing to accept to sell is the ask. Sometimes you will hear people refer to the ask as the offer. In other words, this is the price that the seller is offering to the buyer. Would you be willing to accept my offer? If in fact a buyer decides to accept the seller's offer, then we have a transaction. A transaction is complete. Now, mind you, in the electronic market, this dynamic, this exchange happens instantaneously, very, very, very quickly on electronic changes that are literally thousands of these transactions taking place in nanoseconds, or the pace of the market is continuously moving very, very rapidly. That's why electronic exchanges are used now. And now that we have talked about the bid and the ask, especially in the Forex market, it is also very important to understand the spread. What is the spread? The spread is the difference between the ask and the bid. In an efficient market, the spread is very small, very narrow. The more inefficient the market, the greater the spread. So if you are in an active auction where there are a lot of participants, a lot of transactions, a lot of activity, the spread just should not be very wide. If in fact that is not the case and you are in a market that is rather dry, not a lot of participants, the spread will be wide. Now, this is especially relevant and important in the Forex market because not all pairs see the same level of activity. And so keep an eye on that. You always are much better off trading in a market that is liquid where the spreads are minimal. Keep your eye always on these spreads and try to find access to the Forex market where the spread is minimal. You are a lot more likely to make money that way and enter and exit your trades faster and easier when that is the case. So let's talk a little bit about a Euro US dollar spread of 1.2170 to 1.2187. That means that you can sell at the sellers are willing to offer to sell €1 for $1.2170. And we go to the fourth decimal. There are some platforms actually that may take it to an additional decimal, but for the most individual Forex traders, it is 4 decimals. And even though this is what the offer is, the buyers are only willing to buy at 1.2178. So there's about a 17 pip difference. And here's an error that I just noticed on my math. I need to correct quickly. This number here was written incorrectly. This should be an 8. And this one is a 7. And that makes our math work out correctly. We now have 17 pip difference for the spread. That is actually for the euro US dollar, that's a very wide spread. I would not want to be trading that. All right. So we talked about the bid, the ask, and the spread as one of the key elements in the auction. Now, what are some of the other elements that we need to discuss and be aware of when we get involved in an auction? Time. Time is a very important element for a wide variety of reasons. First of all, the opportunity that is available at a certain point in time is not available all the time. So time is a variable in the market that influences price action. In other words, at this time, price action may be in a particular area that will not occur or will not happen at another time. That's one way where we see the influence of time. Another is in terms of our trading strategy. When you put on a trade, what duration do you anticipate or expect for your trade to manifest itself, to make a profit, if you will? Are you trading based on intraday activity and just you'd like to close out your position before the end of the session? Are you looking at holding a position beyond the day, perhaps 2-3 days? Are you looking at weeks? All of these variables are very important elements because in the Forex market you have all these different time auctions taking place concurrently, meaning at the same time. You may be placing a trade with an intent to close that trade out in a few minutes, let's say. Another market participant, their intent could be in a few days. A different market participant could be a few weeks. Yet all of these market participants conceivably could be conducting transactions at the very same exact point in time. And so often a student will ask, who in their right mind is buying here? Who could possibly be buying when the market is dropping so quickly? Well, from your perspective, As someone looking at a shorter time frame, yes, you may ask that question. But from another perspective, they may be a great opportunity for them to participate and to buy at that portion. And always remember, for every seller, there has to be a buyer. The bid and ask have to match for a transaction to take place. So you need the different levels of participants, and you need to be cognizant of that when you are in the market, that different participants have different goals, different styles, and will trade differently. And the beauty of the profile is it really helps us to see that, and I will demonstrate for you in the lessons how we do that. The next key and critical element for us is, of course, price. Price is constantly moving and fluctuating relative to time. And it is influenced by all those participants that we talked about, and those participants influence the price through the volume that they bring in, the amount of trades and the capital that they put into the market in their trading activity. Last but not least is direction. All right, so when we're looking at an auction, we want to know the duration of the auction that we're looking at, the price that is going on in that auction, and the direction. Which way is that auction really moving? Now, keep in mind that you could have a weekly auction that is moving lower, and yet an hourly auction that's moving higher. So one auction within another could have completely different direction in terms of the movement, and we will talk about that. And that's why it is very important to understand each of these independent elements when it comes to the auction. All right, so let's now talk about my favorite type of chart, the profile chart. What are some of the key concepts that the profile chart can bring to the table and identify for us that we do not see or come across in the other types of charts? First of all, profile charts are built on time price opportunities. A time price opportunity, the TPO, is really the building block for any profile chart. And that is really a piece of data on the chart saying that at a certain point of time, this price was available in the market for people to trade at, and transactions took place at that trade. And the profile, if you have the market delta platform with a footprint chart, will also identify for you how many were traded at the bid and how many were traded at the ask at that TPO level, at that price level. Auction rotations. This is one of the things that I love about the profile. It really helps me to get a good handle on the rotation of the auction. And this is key to understanding potential direction. How is the auction rotating? Because the market is constantly and continually moving. And these rotations help us to stay on the right side of the market. Another key element that the profile chart really helps us with, and one concept that we will visit and sort of discuss at length, the idea of price acceptance and price rejection. And more importantly, auction participation. Now, I'm confident that most individual, or perhaps all individual traders, realize that as individuals in the Forex market, they are really very, very, and maybe add 20 or 200 more varies to that, small participants. Certainly nowhere near the wherewithal that a central bank would have and the kind of access or capital that they have. So as individuals, the level of or the impact that they would have on the market is really non-existent, just very tiny. And so what is important for us to be able to identify the footprints, if you will, of the participants whose activity really counts, those who can actually move the markets. And in looking at line diagrams, Renko charts, point and figure, candlesticks, bars, all these things that we've looked at, none of them can identify for you these types of participants or this type of participation in the way that a profile chart can. All right, so we talked about the fact that each of these letters represents a TPO, and I also mentioned that each of these profiles represents one full 24-hour session. So really on this chart we are looking at one session here, and we are looking at another session here, and each of these trading sessions is a 24-hour period, or at least this is how this profile is structured. We can certainly adjust and change the structure of the profile to suit the time increment and the time period that we are looking to trade. So of course I can do a 2-day profile, a 3-day profile, a weekly profile, a monthly profile, provided of course that you have the appropriate platform that will allow you to do those types of settings. The two platforms that I use are Market Delta and Investor RT, and both of them have this capability that I'm describing, the ability to adjust and to change the profiles. Well, we will talk a little bit more about that when we talk about strategy, because of course trading is never about a one-size-fits-all, and adjustments have to be made to accommodate different types of trading strategies and different time frames. But let us at least look at one more thing that the profile identifies for us very easily that we could never see in a candlestick, on a bar, or anything else, and that is whether there is imbalance or balance in the market. Look at this, just a picture of balance in this area here. We have balance down here, and we have imbalance right here. You can see the difference. Now, when the market is balanced, it tends to rotate around a certain price zone, and that means that there's acceptance here. There's a lot of trade that is going to take place in this particular area, and the market is continually fluctuating between a state of balance and imbalance. When it's imbalanced, it means that there are either more buyers than there are sellers, or vice versa, there are more sellers than there are buyers. But in areas where you begin to see a cluster form in this way, areas of equilibrium, if you will, or areas of balance, the number of participants in the market in terms of sellers and buyers is closely equal to one another. And the numbers don't necessarily mean the actual physical number of the participants themselves, but the number of volume that a seller is interested in trading and the number of volume that buyers are interested in trading is closely matched, or there is a certain amount of balance there in this price range. All of these things are things that you would never be able to discern or identify on any of the charts that we talked about. Hopefully now you have begun to see some of the important concepts that we will be discussing vis-a-vis the profile, and why it is so important to understand the auction and what's happening in the auction to be able to understand and benefit and utilize the profile. Quite often, I find that people who turn away from the profile turn away from it not because the profile is not useful, but because they don't understand the auction to start out with. If they really had a good understanding of the auction market and how it works, and then they began to see how the profile organizes and arranges the data from the auction, they would fall in love with the profile. All right. With that, I think we are now ready for lesson 2. So we will conclude our first lesson, and I will see you in the next lesson.